Hello and welcome to the Down to Finance podcast by Future Finance Group. My name's Amie and I'm the director, and my amazing team will also feature in some of these series. We are going to help you with learning about how to purchase your first home and everything else finance. Just remember to keep in mind, these podcasts are just general advice. And if you are after something more customized, reach out to your financial advisor, or you can reach out to us and we'd be more than happy to help. Today's episode is about let's get application ready, something all of us mortgage brokers are really passionate about. It's a crucial topic. So what does it actually mean? I'll take it over.
For me, I would say that being application ready is basically like going on an adventure. And like any adventure, it's always good to not go it alone. Mm-hmm. And obviously just getting you nice and prepared for that application.
Yeah. So it's a great analogy, says. So I know when I'm ready to get, with the caravan on the back and packing the caravan with all of the supplies and everything like that, there's checklists, and sometimes it can take planning for, 2 and 3 months before it actually happens. So I just want to say thank you so much. Today we have Brendon in the house and we've got Sarah in the house, both senior mortgage brokers that have been with us for many moons. So today we're going to break it down as a very easy way for clients to understand what it means to get application ready. I might just touch on how you both felt when you first applied for finance and when you sort of started your journey in terms of, it doesn't mean that you're just purchasing. It can just mean, applying for finance in general.
So my first house that I made an offer on, didn't know what I was doing, went straight to the bank.
Yes.
This was prior to you being a broker, right?
Way prior, thankfully. Hopefully I know what
just
I'm doing.
Just clarifying that.
Yeah. So my first property, put an offer, I was accepted, engaged with the bank. I don't know if they knew what they were doing, but in the conveyancer as well probably wasn't guiding me. Mm-hmm. So I was coming up to the end of the finance clause. I'm like, I've submitted my documents and haven't heard from anyone. Just like, I guess it'll just all work out. And didn't like the conveyancer wasn't sort of pushing about the finance clause, and the bank weren't coming back to me to say approved. Yep. And this is, well before internet sort of days or where email was common communication. I'm not that old, but
back in the day where the fax machine was the way of communication.
That's right, horse and cart. Mm-hmm. But the offer fell through because no one was sort of like guiding me to go, hey, we need this or that. And I was actually buying off the place I was renting, and it was, hey, like, how's everything going? I don't know. It's really setting a thing. So it all went sort of by the wayside, and the whole contract fell over. Yeah. So I didn't have anyone helping me on my little adventure or misadventure.
I can imagine that would have been scary.
It's scary. And it was in Queensland, so 10% deposit sort of all in, like, Carton or Forex sort of secured the property. So didn't lose sort of too much money over it. But had no idea. So that's where I guess what we offer as a broker is that hold your hand process, or be there on the little adventure with you, leading you.
Yes.
To make sure that doesn't happen to you.
I had a little bit of a different scenario. I was probably, I guess very well equipped because Amie was actually my broker for my first house. So I sort of had that experience firsthand. And it was a good experience.
Thank you.
That was quite a long time ago as well. And that's actually how I got into mortgage broking. But there was a lot of preparation leading up to that application process as well. I sort of had a little bit of definitely a better experience than
which is
you.
Kind of perfect because you're both on complete opposite sides of the table.
Yeah.
I mean, obviously, Brendon didn't have a great outcome. There was a lot of, I guess, uncertainty, unknown, probably stress, given that he's actually living in the house that he was supposed to buy that then fell over.
Yeah.
Obviously, Sarah, came with, confidence and reassurance and had her ducks in a row. And, I
Yeah.
guess it was probably happy
Good broker as
feelings.
well. Good broker.
So
Yeah.
I guess obviously being application ready means that you have everything ready to submit your application, and it's about, I guess, making sure that you're in the best possible position. And the reason that we try to educate our clients to come to us as early on as possible is so that we can really start to make your application the absolute best that it can be. And something that probably maybe some clients aren't aware of is that, there isn't a human assessing every single file that goes through to the banks. Banks are using, computer generated algorithms to spit out a yes or a no. So how about we talk about some of the things that make a client application ready, and what are some of the things that we've been able to do to help clients get to that application ready status?
I think what I think most people probably aren't aware of is the with like the credit reporting, for instance. So that's a huge part of your application. So that obviously we're all given a credit score, and some people or most people don't actually know what their credit score is. So I guess
Let alone even downloading a copy of their credit report.
and all the information that's on it, like even down to the point where they know if you have changed employers or, address, etc. So, and all of those little things, are what is made up of what score you've got, I guess. So I think a lot of people would probably be surprised as well, like how long we might work with a client leading up to that application process. So for instance, I've worked with clients for, 12 months before we actually are ready to get, to go to the bank. And that's generally because of credit impairment. So, it's then engaging maybe a third party to help in repairing that credit. We've had some pretty good wins, probably, especially of late, actually.
Had some huge wins. I think probably one of the main points with us running a credit check is sometimes it's not a big issue where someone's, defaulted on a car loan or something significant. Sometimes it can be the Optus bill from when you were 18 that you got to pay.
Or the latitude,
very,
interest-free
very small ones, which you wouldn't
credit
even
card
think
that you
of.
forgot was even
and now
open.
everything you're doing is completely, you manage your money well, but you didn't even know that you had that outstanding $500 Optus bill that's now been handed over to a credit collection agency. That's probably one of the most common ones we've seen, very, very fixable.
Yeah.
But we still need we need to get onto that as soon as possible.
And sometimes it's only like, as you said, it's a phone bill from when, you were 20, 21 and it's $300 and it's going to come back and bite you in the bum. And, obviously if we don't do these checks prior to submitting your application, all of a sudden we can go from a good circumstance to a poor circumstance. So
What's the difference between a decline or an approval, really?
Yeah.
And that can be hard to overturn.
But all very repairable. So
if we're preparing.
If that situation comes up, obviously we introduce the client to a credit repair company.
Yep.
They then take on that case on their behalf to go and negotiate with the
Yep.
debtor.
Yep.
To have that removed and sorted. Very, very high success rate, even on some extremely high credit repair issues in the absolute thousands to those sort of minor ones. And the credit repair company that we work with, sort of a bit pro bono, if they're successful, that's when they'll sort of charge the client
the fee.
The fee.
Yep.
But, amazing what they do.
And that's just like a small one that we're talking about. I've also seen bankruptcy listed on clients' credit reports. And, we've been able to outsource to this credit repair company, and they've been able to do, a 360 for this client, and something that he thought he wasn't able to do for, 5 years, he all of a sudden was able to do within sort of 12 months. So it's definitely beneficial reviewing your credit report. There's all areas that we work with clients to improve. It takes around, 45 days for a credit score to be changed or improved after closing a credit facility. So it's not something that happens overnight, unfortunately. So if it's something that, you haven't been aware that you've got a low credit score and you've got multiple buy now, pay laters open, and you see a house on the weekend that you want to make an offer on, and we haven't done this application ready process with you, unfortunately you might not be able to make an offer. So hence it's really important for us to obviously speak to you sooner rather than later, so we can obviously tick off this one, I guess, factor that we look at in assessing your overall position. What are some other areas?
And just touching on that, I'll just mention so that people know, a good credit score you sort of want, would you say like 600-700 or something like that?
A good credit score, I'd be saying 750.
Like more than,
I'd be saying 750 is healthy. I'd be saying anything below 750 is starting to get towards the average, and anything under 600, we're going to have to start doing some work.
Yeah.
Putting on our gloves and start to be doing some cleaning. And it's nothing to be embarrassed about either. Like, I think it's really important to take away, like, whether you're embarrassed about your circumstances, because so much happens in life, and they don't teach you this in school either, by the way. Not that I want to tell anyone my age, but I don't think I've been out of school that long, and I think that these are important things that obviously our younger generation probably need to learn, that rather than going and getting some buy now pay later earpods or noise cancelling earpods, or whatever else they buy on their Afterpay and Zip Pay and everything like that, if it is an important goal of yours to buy your first house, try and stay away from that, and really try and put you into a position where we're saying to the bank that you don't need credit to buy a $200 item over 4 payments.
That's right. And especially if you've got savings there, use it. The bank was if you've got $50,000 towards your
house
deposit, like
why
you
are
don't
you
need
needing to pay something so small?
It just comes down to that perception at the end of the day.
Absolutely.
So I think we've got a pretty strict rule in Future Finance Group, and that's sort of like, if we do identify any of those that are in your transaction accounts or showing on your credit report, we really try to get those closed prior to submitting your application, because it's a stronger application at the end of the day.
Yeah, overall you're just improving that application.
What about if we talk about expenses? So something that's a bit of a hot topic for our good old tradies, that you guys are earning the good bucks, and I think sometimes I don't know if it's is it like the weather that puts you guys in the sheds for a few hours until you actually get sent home?
On the dish lickers at lunch, $5 on the nose.
Yeah. And I think, just going through your bank statements and identifying, I'm going to say, red flags. So red flag expenses, what could they potentially be?
Maybe a little bit of the old
sports
bet.
You've got your sports bet, and you've got your Uber Eats, obviously, your delivery, food, you've got your, even just things like your multiple subscriptions to, Netflix
and Disney.
Well, everything's so accessible these days,
And I guess
eBay,
it's not necessarily like those subscriptions. It's not that would get your loan declined or anything, but it's obviously just reining things in so that you don't have as much outgoing.
Yeah, correct.
It's not that you would get declined for having a Netflix subscription, but if you by the time we add up Disney, Netflix, Stan, and all the rest,
I think
there's $100.
It was about $85 I added up per month for one client, who's, only earning, probably around $80,000, and it can significantly affect your borrowing capacity.
And it's about overall money management moving forward.
Absolutely.
It's easy to spend when you're living, with mum and dad. Brendon's still at home and he's still throwing around like he's Jimmy Packer. But when he moves out, he'll have to sort of rein it in. So it's not saying that the overall spending is unhealthy or would, get you decline, but trying to set up for success when you do
moving
take
forward.
on a mortgage and having that responsibility.
Yeah, and it's again comes back to that perception at the end of the day. Like, we're not saying that you can't, gamble, or you can't, put a bet on or something like that, but maybe just be aware of the amount of times that it's happening throughout the week, or
And the amount.
leading up to when you are going to be submitting an application. Let's just be aware of what actually is going in and out of your bank account. The other area that I'll just quickly talk about is obviously savings and what's considered like genuine savings compared to like the other options.
Yeah.
Gen savings, so has to be consistently saved over a period of 3 months at a minimum. And when we say consistent, that doesn't mean sort of $100 a week and then at day 85, 20 grand comes into your account. So it has to sort of be relatively consistent. If you do have a lump sum in the account before that 90-day mark, that's sort of looked over, discounted, that's okay, game on. But it's generally if a large lump sum appears within that
we need
3 months leading up to that
explanation.
That application. So they look at consistent savings because they want to see, okay, we're going to lend this person X. We want to see that they've got consistency in managing their money and saving each pay cycle.
And it's
5%
of
your property
5%
purchase.
of your purchase price. And I think it's okay for mum and dad or whoever to give you a non-refundable gift, but if you guys haven't met us and the money's still sitting in mum and dad's bank account and you are wanting to borrow 95% and go into one of the government schemes, it's really important for us to have these conversations now so we can get that money into a bank account in your name so we can start building on top of that gift.
And it's only 90 days. Like, we're at the end of March.
It's 90
Christmas
days.
Like it was yesterday.
However, again, if you see the house on Saturday, it might mean that you can't make your offer. So that's why it's just really important about being application ready and trying to educate you about what needs to happen in order for you to get that loan approval.
One thing that is sort of application ready relevant, and it's one of the biggest urban myths, and that'll get asked about a lot, is time in employment. And how many times does it come up? I haven't been in my job 6 months. And
people are quite shocked by the answer.
Quick shock. And a lot of lenders out there, especially some of the first home buyer lenders, which is great. One payslip if you're full-time or part-time, you only need the 6 months if you're casual.
Yeah.
So it's a fantastic sort of little policy, and it's probably one of the biggest urban myths that I hear, like, oh, my friend said like this and that. Well, is your friend a broker? No. But definitely sort of, one full cycle payslip, and as long as everything else stacks up, game on.
Yeah. And like employment is really important. Income is
You
really
need a job too,
really important. Yes. And I think obviously different industries as well have different policies. So there's always going to be the banks that are favouring certain industries, like, the healthcare industry. You've got your police force.
Emergency services.
Yeah, you've got your government backed jobs and things like that. So, I mean, the thing is, being application ready is about knowing like what you are actually able to do and what you are able to buy. And I mean, sometimes reading a payslip now is like trying to order a pizza, there's a lot going on. There's multiple toppings, there's multiple sauces. I think there's different crusts. There's different sides now. I think you can get cheese in there.
Yeah.
So reading a payslip and interpreting a payslip is what we do best. There are different categories on payslips. You've got overtime, you've got bonuses, you've got
allowances,
salary sacrifice,
you know,
all those sort of factors that can be taken
and
into it.
if you are to go to a bank directly and, for whatever reason they don't use 100% of your overtime
Allowances.
or whatever it might be.
Don't accept salary sacrifice.
It could mean, you found this wonderful property on Saturday, it's, 700, and that particular bank that you've gone direct to can only get your borrowing capacity to 640. Okay, so straight away, that's not a great outcome. Whereas what we do is we'll find out that goal of you wanting to buy for 700,000, and we will try to workshop with the 40 lenders that we've got on our panel and work out what lenders are going to use the maximum of your income in order to achieve that purchase price.
That's right.
Yeah.
And sometimes it can be for the positive, because sometimes I didn't think I could borrow that much. And we're certainly not into pushing people into more debt that they
No,
can't
definitely not.
afford, for one, or more importantly, individually comfortable with.
Yes.
However, sometimes, I didn't think I would be able to get that property.
Yeah.
Especially a lot of our single clients, like property prices are high. So,
Yes.
they sort of want to maximise their
Yep.
borrowing capacity to get into that slightly
Yep.
better area property closer to work. Could be a difference between a house and a unit.
Yep, and that's another thing to touch on. Like, there's a whole different avenue of income that we haven't even spoken about, and I know this one's one of your favourite, the good old Centrelink income.
Yes. Yeah.
Especially for our clients that have gone through, a separation and they're receiving, single parenting payment, family tax benefit,
Child support.
child support. There's a lot of moving parts.
That's right.
The income's variable. And it's our job to try and achieve that home ownership goal for them again.
That's right. And,
Yeah.
we've got lots of clients like that. And there's the family home guarantee for single parents, 2% deposit, fantastic scheme. A lot of those clients do have Centrelink, and the Centrelink has to be taken fortnightly. You can't take it
You
as
can't,
the cash cow
Yep.
at the end of financial year. And a lot of clients don't like that, but we can let them know how if you do start taking it fortnightly,
Yep.
it can be used towards borrowing capacity.
Change that income frequency, get it
That's
paid
right.
fortnightly, and all of a sudden it's an
Now
income
you're
that
at
we...
here rather than here in terms of your property purchase
Correct.
price.
Yep. And the other areas that I was just going to touch on is about just documentation. I know for me, I've had a lot of clients that are obviously recently become married. So change of name. It's really important that if we're applying for a loan application, the name on all of your documents must marry up, including, the driver's license that doesn't have a middle name or a middle letter, and your passport has 2 middle names. This can be a really big hurdle. We've also had clients that haven't received their they've been married overseas, they haven't received their I think it's the marriage certificate from the Victorian government. So
Yeah, you have to re-register it.
yeah. So
Lost
it's just
birth certificates,
lost birth certificates, don't have
passports
category.
expired
Yep.
after COVID. A lot of people
Yes.
didn't renew their passports for a while. So
Yep.
yeah.
So I guess obviously just having your ID that's across the board all matching, that's one
Or
really
citizenship certificate.
Yep, citizenship
Like
certificates.
visas.
Yep.
That's always one that no one can ever find, or it's a bit harder to obtain.
100%. So I think obviously the way that we support you through this journey is something that, is very close to us. As I said at the start, we don't discriminate against any client. We're welcome to have a free, no obligation appointment to find out about your circumstances, prepare you with a customized action plan that helps you, identify, I guess, weaknesses or red flags with potentially your file. We go into really in-depth conversations about the income, the borrowing capacity, the improvements of your credit score. And then we prepare you with, this might take us 3 months. This might take us, 12 months. Like I even know for me, like we did a first home buyer seminar, 3 years ago, and these clients had just had their offer accepted last Friday. And they're like, we met you 3 years ago. And I was like, wow, that's so
because that's what I was going to say.
cool.
Like, even if your savings journey isn't really, started yet, you might only have a few thousand in the bank. Like I know I've had clients where I've worked, like same story, I guess, but you've worked with them for 2 years sometimes, and then, we finally get them there ready to go. And I actually really love that part because it's almost like, I've been through that journey with them as well. I'm just as excited and proud, and yeah, it's good.
Yeah. So thanks for tuning in today. We hope you feel excited and empowered to start your journey. Just remember, it's not about the home loan, it's about your financial future, and we're here to be a part of it with you. Until next time, take care, and we look forward to working with you in the future.